Hello everyone, this is the Trader Investor, and in this video I'm going to analyze where the markets ended at the end of the week of March 26, 2021, in relation to structure, in relation to area of value. How did they fare out this week, and were there anything that showed that the markets were continuing their current trend? Did we have a breakdown of structure? Or did the markets just not show any sign on either side? That's what we want to take a look at. And as I just mentioned, I'm focusing on structure and area of value for this video because we're analyzing how the markets ended at the week. There's no entry or execute analysis in this video. On Sunday, I will go over what my plans are for the following trading week. So let's dive right into this and look at the charts. And before we get started, what I want to look at is what is our overall sentiment. And sentiment uh, gauged by UVXY, gauged by the 10-year treasury bonds, and also gauged by the VVIX and the put call ratio. So starting off with the first few charts that you see here, the S&P moves opposite of UVXY. As UVXY drops, that's the volatility. As the volatility drops, S&P rises, and then vice versa on the movement. And the 10-year bond usually leads the UVXY in terms of telling us where volatility could head. So as the 10-year bond rises, UVXY rises, and then S&P drops. And on the other side is the 10-year bond drops, UVXY drops, S&P rises. And what we have seeing here is on the daily chart, we see that the Treasury bond had an up day, but UVXY had a down day. This is some sort of a divergence. And UVXY and S&P, they were right in lockstep because they move in opposite direction, and so we saw that action. With the Treasury starting to push the 1.68 to 1.7 area, I'm starting to feel like there might be some cautionary areas up ahead. There might be some leading indicator telling us we might get into another set of pullbacks. It doesn't tell us the strength of the pullback. It just says, hey, watch out, volatility could increase. If that happens, we could have another pullback. So I want to get that sentiment taken care of, right? Where is the market thinking? And then I'll add my other two sentiments. The VVIX, this is the volatility of the VIX itself. If it's above 120, it's where there's a lot of volatility, very, very high volatility. Prices are dropping significantly, lots of fear in the market. If put call ratio is above 1, same thing. Everyone is thinking, wow, we're about to collapse. I better hedge my position. I better keep accumulating put positions so that put call ratio goes up above 1. If both the VVIX and the put call ratio turn red in my chart, or one red, one yellow in my chart, meaning VVIX is above 110 and put call ratio is above 0.8, if that happens and one of them cross the upper threshold bound, then I am tightening my stops, I'm exiting my positions, I am putting on put positions, even if it's for a short term. Again, just like the UVXY and the 10-year bond, it doesn't signify the depth of the pullback. It just says, I'm about to have a pullback. Just take advantage of it. It just kind of gives me an indication, a warning, a heads up. Hey, you might want to do some puts and take advantage of that. It's all about positioning ourselves to take advantage of the situation. So once I got the sentiment taken care of, right, the overall sentiment for the week that ended last week, sentiment is strong. We're still heading up. That's all I'm seeing. Then I will go to my regular analysis and start with my monthly chart. So my monthly chart is in an uptrend. Everything is intact. Nothing is broken for the SPYs. On The Qs, same thing. Monthly chart says we're in an uptrend. However, it just says, hey, we might be in a short-term pullback and a very strong recovery from that pullback, right? When we'll see it when we go into the weekly and the daily, we'll be able to see that, because what we want to focus on is structure, area of value, structure, area of value. That's what we want to focus on. So as we look at those, and we see, okay, there was a structure broken on a monthly, but we're recovering that broken structure. IWM, similar. We have structure that is not broken completely, but on the weaker side. And then when we go to weekly and daily, we will see where we see those weaknesses playing out. Diamonds, very, very strong upward movement, very, very bullish. Right? There's no indication of a weakness in the diamonds. We keep making higher highs as we look at the monthly. Now let's go to the weekly. And on the weekly in the diamonds, we saw, last week was a down week, but this week we recovered that all those pullbacks, and we're starting to head back up. So that's what the diamonds on the weekly are showing. In IWM, this is where you see the structure that was broken, but price started to recover from those broken structures on a weekly basis. And when we go to the daily, we will see where the turning points are. In the Qs, structure is broken when we're looking at the trend line. Different people draw trend lines differently. This is how I draw it. I try to connect a couple of points and see where structure is based on that. And when that is broken, then we're out. That's okay. But what I'm seeing on a weekly basis, we are forming a consolidation here. And so I being cautious on where price is based on this consolidation. Are we going to break down, and are we going to start to see price do this, right? Are we going to do this, or are we going to break to the upside, retest the trend lines and continue this? This is yet to be seen. So I'm just waiting for price to tell me where that is heading. And as we go to the SPYs, very strong uptrend, no structure broken. We're still showing some strength in the bullish movement. Then let's go to our daily. Our daily in the SPYs, this is where a lot of trend lines and support and resistance are coming into the picture. We're making higher highs. We're making higher highs. We're making higher lows. I think that's the key part. Is we have a low here, and then we have a higher low here. So as long as we're making higher low, we're good to go. But if this is broken, if this line gets broken, then it's a different picture. If this line gets broken, that bullish momentum is continuing because we continue to make higher lows. Higher lows, higher highs is what we want to see. So as long as that is maintained, and this is what the structure is telling us for the SPYs, we are in still in a continuing bullish trend momentum. On the Qs, this is where we had seen that trend broken, the structure is broken, and now to get back into the structure or to form a new structure, I want to start seeing these highs broken. So this is why as long as we have this low, higher low, and then we continue to make higher lows, we're good. Or if we start to see these highs broken, we're good. If we start to see price move up, test those highs and move up again, we are good on the long side. So on the downside, I want to see this lows broken, this lows broken. If we start to form lower lows, that's where we start to be cautious and start to validate where we stand in terms of structure and area of value. But here, we can use these support areas as area of value. But if we didn't get in on Thursday, then we have missed it for Friday and definitely missed it for Monday, assuming that price continues. If price falls to these support and resumes, then we will have a second opportunity to re-enter. But it's not about entry. I'm just positioning you for area of value. This is where I see area of value. This is where I see area of value. On IWM, it tried to break it, beginning of this month. It actually broke it on the 23rd this week. And now that the structure is broken, we need to see, we have this double bottom. In this area here, we have a double bottom. Double bottom doesn't have to be perfect, precise points touching. For me, it's close enough. This is double bottom. And so we bounced off from that double bottom, which is a good sign. And I want to see then new higher lows made from this point. So I want to see price do this, right, and form new higher lows. This is what I want to see for us to confirm that we're back into the bullish trend as a structure. So we are near an area of value being the monthly trend line that is broken. So if price gets rejected here, if price gets rejected here and it forms a candle something like this at this trend lines, then we know we're starting to make lower highs and price is going to tend to want to continue down. So this is an area of value that I want to watch for at the start of the week or even by the middle of the week. Where do we end up in the structure? Do we actually break it? Right? Do we break above it, retest it, and continue up? Or do we get rejected here, strong rejection with volume, and then continue the way down? That's what we want to make sure we're validating next week. Right now, we're close to an area of value, and we want to just be on the lookout what that does and look at our sentiment. Does VVIX continue to fall? Does put call ratio continue to fall? Based on that, we will position ourselves on the side of the trade we want to take on. And looking at the diamonds, what I want to see on the diamonds is for price to continue to push higher and retest this upper daily trend line, retest that zone for potential entry. So this is our area of value. I want to see a retest of area of value. Right now, the structure is saying, hey, we're above area of value. We're still in a strong uptrend. There's no broken structure. Are we waiting for an area of value? Where are we in relation to the area of value? We're far from it, right? We're quite some distance away. So we don't like to chase. We want price to come to us. Price comes to us. Price comes to us. That's when we enter, and price come to us means area of value. Price comes to an area of value, and we enter. Just like here, price came to an area of value, and based on the hourly chart, somebody could say, hey, as soon as this breaks, I'm entering, and this was a good entry. Very, very valid entry. Now, if you have missed this, or if you want to add to it, it's waiting for price to give us another possibility at area of value. So in relation to area of value, we're a little bit away from it. Then we're just going to keep waiting. So basically, this is how the week ended. Not a bad week. It has been a strong week. We are maintaining our structure, or at least the breaking of the structures in the Qs and IWM is contained. It's not an exaggerated breakdown. It's contained, and You can redraw your trend lines and say, hey, based on the new trend lines, nothing is broken. That's also a valid way of looking at it, as long as you're convinced that the new trend line is not drawn to make it look like it's not a broken trend line, but you have some valid reasons why you're adjusting that trend line. As long as you're doing that, it's great. So in relation to our structure and area of value, this is what the markets looked like at the end of March 26, 2021. And with that, I will wish you a great weekend, and we will analyze some more charts Sunday evening, Monday morning for the trading week ahead. Take care, everyone.